Good evening, everyone. Welcome to the Locking Your Success Trade and Market Update for December 22nd, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event a trade is computer simulated, we do the best we possibly can to make sure it is as accurately represented as possible. Also, if you're watching this on YouTube, come on over, visit our trading blog at lockingyoursuccess.com, find out about our mentoring programs, and join our weekly market updates geared towards income traders. Okay, before we get going, just talk about a few things. According to the website, we have a webinar scheduled for Monday morning. That is not going to happen. We're not starting our Monday webinars till the following week, which I believe is in, let's see, it's going to be, I think, 30th of December. And if you did sign up for it, you will be getting reminders that the webinar's tomorrow. It is not. We're not starting until next week. So just keep that in mind. And I apologize for, we have a bit of a computer glitch there, or a programming error that we're trying to straighten out, and we'll be good to go next week. All right, let's take a look at the markets. All right, so here we are with the Russell 2000. Had a very, very bullish week last week. However, we're still in our sideways range. As we said, we were expecting the market to stay relatively sideways, and I'm still of that opinion. We are right up in our circle, which we thought we would be towards the end of this week. I thought we'd be there by expiration, but we had a bit of a down move. And I wasn't even quite sure we were going to get up here because, like I said, I did think that we're going to top out right around this level. Is it possible that we go a little bit higher? Yes. I would say even if we do go higher, we're looking at a top probably around this 1170 area. However, I think that's unlikely. We may pop a little bit higher intraday, but more likely to roll back over and stay in range here going forward. If we look at the SPX clearly had a breakout on Friday, and we shall see if it continues or if it fails. If this does continue, it will drag the Russell higher. So we'll just have to keep that in mind. And again, if the Russell goes higher, I still think I see a top at 1170. We also had the NASDAQ, which broke out slightly higher. Again, this is kind of a weak breakout. I'm not overly concerned about this, but I am concerned that it closed higher. And on the Dow, again, we had a bit of a breakout, but still, this is a rather weak breakout. So we'll have to see if these breakouts hold in the indices or if they pull back. If they hold and continue higher, then, well, it's going to pull the Russell up. But, we're talking about this, and even though I was thinking we're going to top out 1135 to 1150, we also said that December tends to be a very bullish month. And when that happens, or times when it's traditionally bullish, sometimes it'll push the technical analysis up a little higher than it should. So no big concerns here. The market's acting relatively as expected. We had, if you were in expiration week last week, we had a bit of a rocky ride into expiration. On Wednesday, we had that Fed meeting, and of course, before we even hit it, the market was up quite a bit. And we had a really big day on Wednesday. Thursday was relatively quiet, so that kind of helped us out into expiration. But that was a little rocky going in, and hopefully everybody made out okay. Let's take a look at how we did with our positions here. And we'll just start with something simple. December V Condor. We had, and this is as of, well, this shows as of Friday. Let's go as of Thursday, of course, because this is expired by Friday. So if we come in here on Thursday, this is basically what the position looked like if we zoom it out. There were no adjustments for the week, and really never in any danger of any strikes getting hit or anything. So we just let this expire at a profit of approximately $3,400. That ends up being a pretty normal, nice trade. If we take a look at our next December trade, we'll take a look at the website, December M3. This, if you remember on Monday, we were looking at something like this. Here's our analyzed graph. And I had pulled the call off and gone into this broken wing condorish type of thing, which is something I told you we typically handle expiration week, and I'm very comfortable handling that. So I decided to trade the rest of the cycle out this way. If we take a look at our T-log on the 18th, the market pushing up, we sold at 1100, 1140 vertical. Then on the 19th, we sold 10, 1140, 1160 put verticals. And then on the on the same time, the 19th, I went ahead and I bought back my downside risk. I bought back my 1080 puts. So if we shoot this ahead to the end of the day on the 18th, I'll show you what we look like there. All I did is I bought that vertical, and that's just to kick the expiration graph up here because my delta was getting a little high and getting a little bit concerned that we may be running this short strike on the 18th, and that's because we had such a big move that day. And then if we go to the end of the day on the 19th, I was getting concerned that we were, oops, let's see if we can get some price data in here. Come towards the end of the day and I back this out. I just basically went ahead and took my risk off and went into a position like this. So we just let this thing expire at approximately 59.40, and this is how we went into the overnight. So that was, like I said, I took off my upside risk and took off pretty much my downside risk and let it expire. And the reason I did that, I was a little tight on the upside. And of course, I'm always concerned about the downside sometimes. I bought these back for 10 cents, so no big deal there. All right, if we go to December ROCK trade and we come back to Monday, I'll show you what we look like on Monday on this position. We basically had rolled back into cat position. Oops, sorry, wrong trade. December ROCK. There we go. We had basically rolled back into a cat position, and then let's just go to the beginning of the day because I made some stuff during the day. So here we were at the beginning of the day. 10 butterflies at 1150, 10 butterflies at 1090. This is what the position looked like here. One of the things when you get into this position, especially when you had a relatively rough month, and this was a fairly rough month for the ROCK trade. I had some people take some losses this month, and I had some people do fairly well, so it depends on how you traded it. But you saw how this was traded the whole month. And we rolled back into cat position, and this is what we looked like coming into the day. Now, it seemed as though, to me, that the market was going to stay in this range because we started to get some up moves here. I'm thinking the market's going to stay here, and I'm probably going to end up expiring this for $1,900. And wanting to at least try and do a little bit better than that, what I did is I started raising this expiration line, kind of like what we do in a V condo. We take out the center. So I started selling off these verticals here, the 1090, 1140, and the 1150, 1100s. And you can see in the T-log on the 16th, I did 2 of them in the morning. I did 2 of them later in the afternoon, so I took 4 of that out. So if you come to the end of the day and we look at our graph, you can see these are starting. 4 of these have gone away. And if you take a look at our graph, I've now risen my expiration graph to 3,300, and I still have some reasonable protection. As we pull it closer into expiration, which will be relatively fast because it's expiration week, the gamma really starts to flatten out on these, which is what I really like. So from there, we went a couple more days, and we're still kind of staying in the middle there. The following day, we're still kind of staying in the middle. So let's go to the 18th, which is Wednesday. Actually, in the morning, I probably would have been better off to wait a little longer, but in the morning I went ahead and pulled off some more of these same set of verticals. So now I'm down to only 3 of them in the middle. raise my expiration graph a little bit more, up to approximately $4,100. And I did this in the morning. Had I waited, I may or may not have done it because the market moved so long. But I went ahead and did that while the volatility was high, and we withstood this move fine. And then, of course, we ended up just expiring this at a profit of about $4,100. And that was the ROCK trade for December. And I believe that's all our December trades. So we will move on to January. For January, on Monday, we had open the January Bearish Butterfly. Let's go to that. Okay, so here, if you remember right, we just had 10, 11.20 and 10, 11.40 butterflies on, and nothing happened to this all week. So if we just come to the end of the day on Friday, you can see that we are pushing some pretty good negative delta here because we had such a big up move on Friday. Our profit and loss is still up about $8,300, $8,400. It was up, I think, $13,000 at one time. And in reality, if I'm trading this not completely by the guidelines, and I'm using my judgment, I probably would have popped into expiration rules a little early and started scaling into our 1160s just to deal with our delta on Friday. But I didn't do that. I'm just kind of follow, like I said, every month we follow the guidelines. It wins or it loses, and this is where we are. And like I said, our everything's within specifications, so there were no adjustments to this week. If we go to the January V trade, this did not get any adjustments either. We're sitting here up about $3,000. If you want to look at the put side of our position, it looks like that. If you want to look at the call side, it looks like that. And as far as the analyzed graph goes, this is perfect. And what do we hope for here? I hope for a grind up into this 1170 level for this trade. It would be really nice. Of course, if we swing back, if we stay in range like I think we're going to when we swing back, I'm going to have to start raising this, see how high we can raise it, and how well we can do this month of the trade. And let's see, January ROCK trade. This was actually entered on the 18th, and it was, I believe, 29 days to expiration. So let's go to the January ROCK, and we'll go back to the 18th. And I ended up entering this as an M3. I put the trade on, I did my entry test. I was very borderline with whether I should go in as a ROCK trade configuration or an M3 configuration, and I went for the M3 configuration. Usually if it's borderline, I'm going to go for the M3 configuration, unless for one reason or another I think the market's extremely overextended. I didn't think so yet on Wednesday, so I went, or I wasn't sure, so I wanted to be a little more protective, and I went for the M3 entry. And if we advance this forward on Friday, I bought, near the end of the day, I bought 5 of these 1110s, sold 5 1120s, and my new position is going to look like, let's see, well, that's the old position. That was our entry position. And I did allow some gamma trend issue up here, right? This is technically, if I was going to enter a straight M3, then I'd probably want a flatter T+0 line up here. However, because this is an M3, a ROCK trade setting, the reality is if we come up here, we'll be converting into a ROCK trade anyway. So I don't mind getting drawn down a little bit. I'd rather have a little bit of protection on the downside. So if we shoot to Friday, towards the end of the day, you can see we rolled those 5 puts up into 1120. Here is what our T-log looks like. I don't believe I tied these in yet. And that's going to give us a trade that looks like this. I'm just trying to start to gradually straighten this out. I still have a good downside protection if we move down. And we're down a little bit of money, but nothing to be concerned about. All right, so January M3 I did enter, and I entered that on the 20th as well, the same day. And I entered it a little bit differently. What I did is like I said, we had a gamma trend problem on the original, and I did not want to have that on a straight M3 trade because you don't want the drawdown if the market goes up. So this is the position I entered the M3. I was short the 1110s, long the 1060s. I had 5 shorts at 1120, 5 shorts at 1130, and 10 at 1160. I bought 2 80 delta calls. This was just happened to be the combination that gave me the T+0 line I wanted. I really was having trouble getting it any other way. And this is how we started the trade. We have decent downside, nice and flat on the upside. So again, that was started on Friday here. So the ROCK trade was started on the 18th. The M3 was started on Friday. And let's see, we got a February V trade that we entered, which is, we'll quickly look at that. February V Condor. This position here was entered short on Friday, was entered short the 1150s. And I had a choice of going, on the call side, I had a choice of going for the 1220 or the 1230s. I don't think we're going a whole lot higher, so I went a little bit closer. I went for the 1220s, put me a little bit more negative delta than normal on the entry, but with a day like that day, I have no problem with doing that. And as of right now, of course, we're just down a little bit because it was an entry day, and it takes a few days to make that up. And this position is entered looking like this. We shall see how this works out. And last but not least, I actually did enter the February Bearish Butterfly. I entered it on Wednesday in the afternoon, and I did it because, for a couple of reasons. I really didn't want to enter this Friday coming up because it's between Christmas and New Year's. Volatility is going to be low. I didn't know where the market was going to be. So now I thought the market might be down from now. So, I mean, it's just kind of a special holiday thing. Usually I don't break from the entry day rules, but I just decided I would because I want to get get in when the market's trading and people are excited because you usually get a good price. So I went ahead on a Wednesday and bought this towards the end of the day. So let's go to February Bearish Butterfly. I don't have a February M3 on for the website, by the way. That's a different trade I'm doing. So here we are. We are 20 points below the market at 1110. We're paying about 1080 for the butterfly, which I like. Part of the reason is because the market was going up like crazy. Here is what our entry graph looks like. And of course, Thursday the market was down, and Friday the market went up like crazy. And this is what we look like on Friday afternoon. We drew down a little bit, but not too bad because I had such a good entry point. Had I entered this on Thursday, this probably would have been drawn down a lot. But because I entered on Wednesday when the market was going crazy to the upside, it was already priced in. So here we go, down 530, no big deal. And like I said, we're in this a little bit early. We'll see how this goes. Of course, if we're way up here by Friday, I probably would have rather waited. But we'll just kind of follow the guidelines and run from there. Right now, we're running a delta theta ratio problem. So that being the case, if we do actually hit our add point up at 1150, we'll be doing we'll be rolling to 1130 and then adding on 1150. So that is all the trades that we have. And one other thing I was going to show you is how we did for the year. So let's take a look. All the monthlies are closed for the year. And Bearish Butterfly, if you remember, we ended up taking this off at a 16.8 profit, 21 days to expiration, closer than 21 days to expiration. We had a hard down day, popped us up to 16.8 profit, and I got out. And that ended up closing the year basically for break even. And I'm not upset about that at all. It was the most bullish year that we've ever had in history in the Russell, And for this to not lose money is absolutely fantastic. If you are trading any other short strategy, or even most of the neutral strategies, or a lot of them, took losses this year because the market was just so darn bullish. Of course, if you're in a bullish strategy, you're dancing in the streets because the market's been crazy bullish. So this is really good, and I'm pretty excited about that. And the reality is, too, a couple of these trades we could have won. If you remember earlier in the year, we purposely let some of these take a loss because I knew that a lot of people that were trading it probably took losses on it. And, you know, like I said, this one here could have been 18 plus 0.6 plus instead of 31 minus if I had not yanked it when it touched max loss for about an hour. And if that was the case, we'd be 40% higher than we are now, right? 49% higher than we are now. And I think another one of these I let lose. And this August was just a slaughterhouse. We just got slaughtered in August. And April, I think, was a legitimate loser too, but this one here could have gone either way. And of course, some of these other ones we could have stayed in longer and fought it and maybe made more profit instead of bailing out at 10%. But very happy with that. Very much underperformed, but you know that's a function of the markets. A bearish, biased trade in an extremely bullish market. M3 trade, again, underperformed because the same reason. This is a very neutral trade. It doesn't lose on the upside. The only reason we lost this 1 month is because we had a 40-point down move coming into expiration, and I was pushing on top of the market probably more than I should have. But it was so bullish, I nobody was expecting that. So we took this loss here. And the rest of the years, it was kind of flat or up a little bit, down a little bit. That's typical of the market. We had our best month actually in December, and a small percentage return, but not bad considering the year. Like I said, it was an extremely bullish year. And of course, we have students or methods of dealing with this that are leaning the guidelines a little bit, where people made out very well with the M3 this year. So that's okay. ROCK trade, I did better than expected with this trade, and didn't take any losses for the year. Had a couple break-even months or close calls. I also had a couple spectacular months in the 30s percentages, and this is very good. It doesn't like chop. You get chopped back and forth, that's when you'll have trouble. Bearish Butterfly tends to excel in that type of an environment, and chop, the ROCK trade, tends to not like that, unless of course you entered as an M3 and you stayed there. But if you enter as a ROCK trade, it doesn't like a lot of chop or really fast moves. And this year, the timing was fairly good most of the year, and had a really good year with this year. And of course, the V trade just kind of loves upgrinding markets. So I don't think we even had any close calls this year. I think maybe January was. But other than that, this is pretty standard. This is much more than normal. It's very, very rare to get a 10% gain. This is more than normal. Usually 5, 6, 7% is usually what we get here. So, and again, this trade doesn't like extreme volatility. You don't want to be trading it in really high volatility. But in this type of a market, it's great. Fairly low return. This is 75.6%, but you got to remember we're running 2 months at once, so in reality it's only closer to 35 or 40, which is spectacular for a V trade. It's probably that's probably the most you'll see, the most you'll see it make in general. But this is a very reliable low yield trade. It works very well. So if you like to watch the market and you kind of want to be hands off and you don't need a huge return, then this is an excellent system for somebody. So that's what we have for those, and I believe that's all we have to talk about. So just remember, no webinar this Monday, and we're going to start the webinars next Monday. If you're not signed up for them, just go ahead to the website at lockeinyoursuccess.com and sign up, so you can watch live if you want. If you can't watch live, they will be posted, but probably Monday night or Tuesday morning, and then we should be good to go. So we'll get going. We'll see how that goes. Christmas is coming up in a couple of days. I hope everybody here has a fantastic Christmas if you celebrate it. If you don't, just have a great day, and we'll talk to you next week. So thank you and good night.